You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out with the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as the Option Insider Radio Network, coming at you live every Monday and Thursday on this show. A lot of other shows throughout the week, but this show every Monday and Thursday, noon Central, 1 p.m. Eastern. You can get it live, of course, on the Mixlr after the fact on your device of choice. However you listen, hit us up, especially a day like today. It's Thursday. It's Mail Block Thursday, so we're going to get you guys rotated in. So if you got a question, a comment, a concern, send it in. We do want to hear from you guys. And joining me on the program today, let's spin the horn, see who we got joining me today on the old All-Star panel. Let's see. Let's go out to the hot seat. Let's start there because it's always hot and squirmy and kind of uncomfortable, so they get more depressed and anxious as the show goes on. So let's get him on now while he's still fresh. Once again, the Song of Ice and Fire joining us on the Fidelity Hot Seat today, Mr. Colin Songer from the Active Trader Strategy Desk. Mr. Song of Ice and Fire, welcome back to the program, sir.
Oh, thanks for having me on. Just kind of getting over a cold, so you might hear that on my voice. But even though this is a hot seat, it's probably not as hot as the seat my son was in just earlier this week. He actually is now just tested and passed his karate test there, and he's one belt away from being a black belt. So I'm a proud dad today. So
wow, how old is your son?
He's 9 years old.
Oh wow, one step from a black belt. My little guy got up to, I believe, purple. And then after that, he decided to take a break. He said, enough of the testing, Dad.
Yeah.
So your son sounds like he continued on that path. So well done. Well done. Once he gets to like purple, once he gets like beyond blue to like purple and stuff, that's when it starts getting real. And the tests actually start getting legit. So, fun stuff. Congratulations to him. And let's move on also out to a quiet, sleepy hamlet I don't think his sons are doing karate, but they've probably done a little bit of football. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. What belts are your various children, sir?
Well, I don't know if it's a belt, but my boy made the AB honor roll for the first quarter of his 7th grade year, so we're pretty proud of that. He's doing well on the football field, but even more importantly, doing well in the classroom. So very proud of my son for that.
There you go. Everyone's proud. Everyone's proud of their children. Let's roll it along to the Rock Lobster. A little bit different schooling scenario for him out there in the hinterlands. I don't know if they have such things as grades. Mr. Rock Lobster from OptionPit.com by way of Carmeline Cattle. Mr. Rock Lobster, do they have A's, B's, and C's where your children go to school, sir?
My kids are homeschooled, so mostly my wife just wants to strangle them all the time.
That sounds about right, actually, yes. If my child was homeschooled, I would strangle him about 3 times a day.
Yes, they actually do get grades, and they seem to be doing very well. So they have to take standardized tests like everybody else. And so I'm hoping at the rate they're going, that we can send them to college next year.
There you go. Get them out early. You want to jump on those absurd expenses as soon as possible, right?
Oh, yeah.
You don't want to defer that one at all. Let's take that 6-figure year expense across a bunch of them, and let's just take it now, because that's how it works. All right, with various levels of parental pride in tow, let's roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we don't just chop things like in karate blocks. No, we talk about what's trading, what's lighting up the old tape on the market today. A bit of a weird one coming into the latter portion of the week. We had some not exactly strong durable goods data coming out here, and yet the market kind of shrugging all that off, I guess focusing more on some of the better numbers we've seen on the micro front from some of the names that I'm sure the Song of Ice and Fire, I'm sure they're lighting it up at Fidelity today, so I'm sure you're going to hear about them in a bit. So looking at here, the Goldilocks one is actually the S&P right now, the Goldilocks index, up slightly about 0.1%. Dow actually down a little bit today, off about 1/3%, probably reflecting that weakness in the durable goods data in the broad economy. And then we got NASDAQ, tech-heavy NASDAQ leading the charge to the upside, up 0.6%. So a bit of a interesting day, kind of depends where you live in the market, what kind of day you're having. Gold and oil also getting a bit of a lift out there as well. Crude WTI up north of 56 handle, 56.5, which is kind of interesting. We'll get into that more in a little bit on TWIFO coming up later today. I do believe I'm going to be joined once again by our friend, formerly known as Dr. VVIX, Mr. Rhodes over there from the Tab Group. And maybe we'll get Sean rotated in FTSE Russell. So it should be a good show there. We'll get into some WTI, a bunch of other stuff. Whatever is lighting it up over there on the old Globex, we'll get into it this week. But let's get into here what's lighting up things on the equity and index options side of the tape. And since I just mentioned you, Mr. Song of Ice and Fire, I guess I'll let you go first, sir. What is lighting up the Fidelity tape out there today?
I don't think there's going to be too many surprises today, but so some of the things that are on the list for top traded by or orders by Fidelity customers, top on the list was Tesla. 32% buys, 68% of the orders that entered were sells. Obviously, on the back of the earnings release there. So Tesla currently is trading at $298.50. It's up $43.84, which is 17% up. That's pretty impressive. It's staying above all its moving averages right now. It really hasn't hit this price level since April of this year, so April 3rd. Broke outside its upper Bollinger Band. And interestingly enough, even though there's a lot more volume that we're seeing today, almost double the volume on the call and put side, the call-to-put ratio is actually right in line with its 90-day average volume call-put ratio. Next on the list was Twitter. I was a little bit surprised at how high Twitter was compared to the other ones. But Twitter is number 2, had 70% buys, 30% of the orders entered were sells, once again on the back of earnings. It's currently trading at $31.18, which is down $7.64, which is down just under 20%. So it's taken a little bit of a hit today. So it's below all its moving averages. It broke out through the bottom of that Bollinger Band there. So getting pretty roughed up here today. And the last time it was around this price level was about March 18th, so March 18th of this year. Now, the volume call-to-put ratio is sitting at 1.65 call paper to 1 put traded versus its 90-day average of sitting at 2.16 call paper to 1 put. So a little bit more muted. That's just based on more put activity going on here in relation. Number 3 was Microsoft. Once again, on the back of earnings, the earnings release there, 41% of the orders placed were buys, 59% of the orders placed were sells by Fidelity customers. Right now it's trading at $140.14, up $2.90, which is over 2%. So it's above all its moving averages currently. It's right now has a volume call-to-put ratio of over 2 calls traded to 1 put compared to its 90-day average of 1.83 call to 1 put. So a little bit more call activity than normal. And then Apple. Now, Apple is right now trading at $242.89. It's down about 29 cents. 59% of the orders placed were buy orders by Fidelity customers, and 41% were sell orders. It's right now above all its moving averages. It is pushing up against that Bollinger Band. The volume call-to-put ratio is sitting at 1.5 call paper to 1 put, compared to 1.25 call to 1 put for the 90-day average. And the last spot, and the 5 spot for us, is Amazon. 57% of the orders placed by Fidelity customers were buy orders, 43% were sell orders. It's currently trading $17.77 and 95 cents, which is up $15.78, which is about 0.9%. The price right now is, I'm looking right at the chart, it's right now still being squeezed between that 50 and 200-day moving average. Interesting, I'll put a little context around this. Currently, the 200-day is above the 50, and the 50 is above the 20-day moving average. The volume call-to-put ratio is 1.75 call paper to 1 put traded compared to its 90-day average of 1.25 call paper to 1 put. So that's currently what our Fidelity customers are trading.
Thank you for that, Mr. Song of Ice and Fire. Let's move on out to that provincial hamlet known as St. Charles. Uncle Mike, sir, not that quiet of a day, actually. There's things actually popping off as a Song of Ice and Fire just regaled us with. A lot of big names moving. Apple, I mean, it's amazing to see how much Apple has moved. We had Eric Metz here from Spider Rock on Friday quizzing people about how much Apple was up over the year on volatility views. And I think it surprised us all just how much it is up. Just doesn't seem like that long ago. It was threatening the 150 handle to the downside, and people were afraid in our polls to sell those 150 puts. It seemed like something structurally had changed at Apple, and now it's up almost 100 handles from that level. It's, the biggest market cap name in the world. Shouldn't move this much, and yet it has. And, of course, Tesla, threatening 300 again. So things are crazy. Things are running amok out there. What is lighting up your tape today, Uncle Mike, sir?
Well, it's like you said, the dogs and cats are living together. It's crazy stuff in there. Yeah, Apple's really around the new all-time highs at this point. So it's kind of crazy to see that today, it made a new all-time high today again. And it's just it's one of those stocks to where we still own it. Still don't have near the exposure that I had in it with the clients that I personally manage. Like I did a few years back on all the shows that seemed like all I ever talked about was Apple. But, it's really something watching it do what it's done. If it innovates like they think they're going to, then at some stage I would put more money towards it. But for right now, the innovation index isn't quite there for me. So all in all, Apple's really something else right now, to say the least, in terms of what's actually happening out there. Some other things lighting up my tape. Silver's up a little over 1% on the day. Of course, the S&P 500's approaching the all-time highs again. It's not quite there, but we are knocking on the doors to where I was hoping I could say my thing today, but not quite at this point. We have that along with Excuse me. Just a lot of different things that are happening. So, for example, we have XLF, the financial sectors, are relatively flat on the day, is one example. However, we have technology, XLK is what I'm going by, up over 1% on the day. So, for the most part, I would say this is more of a technology-driven rally today. If you really want to call this even much of a rally, up a couple points on the day. But there's just a lot of different things happening. And you combine that with the VIX, it's below the 14 handle right now. And a lot of things that are going on. With the earnings season with which we are in, I generally enjoy these seasons because it's actual companies that are moving the market as opposed to Twitter accounts and Fed news. So I feel more like a capitalist at this time of the quarter. But either way, we have what we have. It is what it is. My cliches are done. I'm giving it back to you, Mark.
Your cliches are never done, sir. Don't sell yourself short. All right, let's move on out to the hinterlands. Let's see if he can match Uncle Mike. Cliche for cliche. Mr. Rock Lobster, sir, what do you got? What's lighting up your tape today?
So am I doing a cliche off with TOSAW?
If you dare.
It is what it is. Don't we have like the Fed?
Already said that one.
Yeah, I know. I already lost. I lost before I even started. Don't we have the Fed
sometimes it's
next
just
week?
over before it begins.
Well, that's the way life is sometimes, I think. But
that's life.
What's going on next week? Do we have some any kind of Fed interest rate decisions are coming up at 2 p.m. next week on the last day of the month. To be honest, what are they going to do? And then they're starting to see, I'm looking at Bloomberg News on Twitter. It's like, oh my gosh, it used to be kind of like a middle of the road financial news, and now it seems to be it's starting to bend a little in one direction. But negative interest rates for the U.S., I don't get it. Madness. We're looking for looks like they're a pretty high percentage for a cut next week. I think VIX is looking for that. I thought we would get a pre-interest rate vol sell-off this week, actually. Just enough to take VIX down maybe 1 point. Everybody's like, yeah, whatever. And we haven't really gotten that. It's a little lower, but it hasn't really vol has not gone down. Vol VVIX is down back into the 80s. I'm just looking at, the 16 strike is about an 84 vol. So vol is starting to creep down. This has all the recipe of vol going into the 12 handle after this Fed announcement. There's earnings. I think the only thing that might change it is, this Hong Kong thing seems to light up every once in a while, gets everybody worried. So that's still the U.S. Yeah, we're not exactly feeling like we're on the right side of this Hong Kong thing enough. I know the NBA isn't, at least. So I would think that could muck up the trade wars a little bit, or there's a short-term deal where we don't talk about Hong Kong, we get the trade deal done, or no, if it ever happens. So there is some. I think that has been the potential volatility area. I don't think we move appreciably up 3,000 until the trade deal is over. Think back to February 2018. That's our last. We approached this level. It was the last time we really were kind of going. Remember January of 2018? I think I remember TOSAW, he's not even selling puts anymore. He's just buying calls and watching them double because the market was totally on fire. Crazy. Everybody thought, it was awesome, right? You buy anything, it went up. It was so easy. You could buy VIX calls, you could buy SPY calls, and you make a freaking fortune. It was awesome. And now we go nowhere. I'm trying to put on an iron condo right now, and I can't even get filled because nobody wants the freaking juice. So I look at this and I go, I just had to take a dime the wrong way to try to fill, and I'm still not filled. So it's freaking boring, okay? This sitting around 3,000, boring. Fix it 14 and realize vol is 9, boring. It's all just sucks. So there's not a lot going on. We'll see if the vol gets loosened up a little bit next week. But I don't see a whole bunch happening. Look, earnings look decent, maybe except for Twitter. I didn't think Twitter was that bad because they've got, more people are looking at it. But, I mean, I think if you look at the level of what's said on Twitter, it might depress you. It's like I can look at it for about 2 seconds a day and go, I can't look at this anymore. So earnings seem to be okay. The U.S. seems to be doing a little not as bad as everybody thought on the trade thing. And then you also got the, I don't even know what Washington does anymore. I think they're just kind of in this full parade or this Broadway show that continually goes on like day after day. I don't know how much legislating has actually been done in the last few years. But our deficit is $1 trillion. The EU has negative interest rates, and it's sort of like all of this stuff just keeps going on, and there's so much of this other crap in the way that nobody's really paying attention to the fundamental stuff anymore, which is still, to me, freaks me out a little bit. But I think that's what we got. It's like more of the same. It's hard for us to rally, and we're stuck there. This is where we are. I don't see it really changing a whole heck of a lot until one of the big factors change.
You are the diehard fundamentalist, sir, of the Uncle Mike's the optimist. Song of Ice and Fire is the George R.R. Martinist. You are the diehard fundamentalist. Let's see what's going on here in the rest of the market. Like you said, kind of a mixed, weird day out here. Light in some areas, heavy in others. VIX actually seems like fairly light coming into showtime here at about, right now, about part of the way through the show here at about 156,000 contracts. The ADV about 420, so pretty light in VIX land. SPY also pretty light. ADV is almost 3.25 million, and they're doing about 1.3 million so far today. SPX almost 1.5 million for the ADV at about exactly 500,000 coming into right now here for the S, so roughly around a third there as well. The Q's at about 340,000. The ADV is 671. And the Russell, a.k.a. IWM, doing about 184,000 right now, and then a little bit shy of 400K on the overall ADV. Number one, in terms of equity options, I think you probably know which names I'm going to name here on the list. Number 10, Amazon, 111,000. 111,000 gets you into the top 10 today, so that's a decent barometer for it's somewhat active for select names out here, most of these being NASDAQ-related names. Amazon, number 10, 111,000. Number 9, Nokia. Don't see that one around much anymore, 112,000. Tied with Facebook, number 8, also at 112,000. Number 7, Intel, INTC, my old stomping grounds, 118,000. There, number 6, Snap, $129. Number 5, Ford at 206,000. Number 4, Apple, a paltry. Number 4 with 256,000 contracts. Number 3, Twitter. 331, numero dos here, Microsoft, 432. That's some paper for Microsoft. Number 1 with a freaking bullet today, Tesla, 627,000 contracts on the tape. That is just on fire out there today. Let's look where our biases lie here in the paper. Looks like it's actually with Microsoft, and Microsoft has 67% coming on the call side. Tesla's actually pretty close to even. 44% on the calls, 56% on the puts. No huge bias either way out there. Intel also pretty close to even as well. Interesting stuff. Of course, a lot of this paper driven by earnings season. It's a hot week. A lot of micro names in focus, which we like to see just to take a break from the mad whims of macro, which can blow us hither and yon without sometimes any real reason behind it. At least micro, here's the earnings, here's what they're predicted, here's what they did. Have fun. Go forth and digest it and trade it. Of course, earlier this week, on Tuesday, we had McDonald's and Snap and Chipotle. Skechers on Wednesday. We had yesterday, of course, some big names that are being felt in the market today. We had Microsoft, Tesla, eBay, PayPal, and Boeing. Our neighbors across the street there, not looking good for them these days. And today, before the bell, we had Twitter. And after the bell, we've got Amazon, we've got Intel, Southwest also today before the bell. In fact, really quickly, if you guys like these, I know you do, head on over to theoptionsinsider.com. Click on that Options News and Articles tab. You'll see all the earnings move, and even more importantly these days, the earnings move results reports. Let's pull up a few of those, see really quickly here. We've got, let's peer ahead a little bit and see what we've got here. We don't have the results reports yet. Unfortunately, they're coming soon, I think, for the Teslas and the softies and all those. But let's look ahead a little bit. We've got Amazon coming out on after the bell today. They were at the time of this report, they were $17.80 or so in the stock. They were pricing in nearly $17 in that straddle. In the past, though, they've moved $73. Wow, that seems light for Amazon. Their Intel was pricing in, let's see, they are pricing in, their stock was at about 52.5 at the time of this report. They were pricing in about $0.0025, not a huge big banger expected there. They moved $2.50 in the past as well, so also extremely light. And then Juniper Networks is also after the bell today. They were trading 23.5 as of the report, pricing in 30 cents, and the past earnings moves $1.25. Seeing a bit of a trend here, listeners? I certainly am. If you want to see all that for yourselves, head on over to theoptionsinsider.com. There are literally dozens of if not more, names here. Really quickly, Twitter before the bell, before their earnings was almost $40, $39.91. They were pricing in, let's see, 70 cents. And they have in the past moved, $4.60. So, wow. They were also fairly cheap as well. These seem surprisingly cheap here from a overall performance perspective. Let's look here and see. Of course, Twitter after they came out today, they were closed at $38.83. They opened up at $31.84, so off $7 and change. So yeah, I think it's fair to say they outperformed it by about any metric, by the straddle. By the past earnings, they almost doubled those. They almost 10x the straddle. So crazy things afoot here from an earnings perspective. If you'd like to see that kind of stuff, listeners, you know where to go. Meanwhile, we have to keep on going ourselves right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. A lot of earnings-driven paper on the old Odd Block today. So let's kick it off. We were just hanging out in Twitter land. Let's stay there for a minute. Twitter obviously dominating the tape today, along with some other names out there doing a lot of paper. And it seems like there is a bit of a trend to the post-earnings trades that we're seeing going up here. Twitter right now, 31.16 or so. That puts it off about 770, nearly 20% from where it closed yesterday. So a lot of downside over there on the Twitter land. Twitter has had an interesting year, actually. A year ago, they were not that far from where they are right now. They're 27.5. And then over the course of the year, they actually rallied up to their high back in early September, so a little over a month ago, of right around 45 and change, almost 46. So they were looking pretty good. All of a sudden now, they're down to about 31 and change. So the bloom has come off the rose pretty mightily out here in Twitter land, the bulk of that over the last month and a half or so. Of course, a lot of that just last night. So interesting stuff here. Let's see what we're seeing, what our Eye of Sauron has delivered for us first. Seems like, Mr. Rock Lobster, a bit of the old premium harvesting going on out here in the Twitters after the report today. Let's start off. These are unrelated trades, by the way, listeners. These just happened to come across our radar around the same time, but they went up about 40 minutes apart or so on different exchanges. So they're not spreads by any means. But we first noticed the Dees 26 puts, so going out a little bit to Dees. Looks like someone hitting the bid out there. These were 26 cents at 31. Someone crushed that 26-cent bid for nearly 4,000 contracts. These were opening over there on the box. Again, so opening Dees 26 puts, which are looking at where things are historically. Actually, a 52-week low is 26.25. So you can see probably how they came up with that 26 strike in their mind. And they're deciding if they want to get open there, and they'll get paid 26 cents to do it on On a similar but unrelated note, I should say, these are not similar, these are not related trades. These are the March 44 calls going up out here as well, also right off the bid. These went up about 30, 40 minutes after the other trade. Someone crushing the bid on these as well, about 3,200 times. These going up for 51 cents. These are on the Philly. These are also opening. So Mr. Rock Lobster, seems like the size trades, at least in the early blush here for Twitter, after the bell appears to be going out a little bit and crushing the old premium. One guy drawing a line in the sand to the downside. Another guy saying, hey, in fact, these levels almost line up exactly with the 52-week highs and lows, which is probably where this analysis comes from. But either way, people maybe drawing a little bit of underlying line in the sand here as well. If you're doing that, if you got the stock and you're writing that 44 call right now, maybe today wasn't the best day to do that. But interesting stuff nonetheless. What do you think about both of these premium harvesting trades and in general what we're seeing out there on Twitter today, sir?
I kind of like selling a 26 put for 26 cents. It's like a 1%er.
There's a little symmetry to that.
Yeah, it feels like a free money trade. I could be wrong. I mean, the puts are up a little bit since then, but Twitter's already back to like 41 vol. You could buy December volatility, and I did yesterday in Twitter for 42%. You could buy the strangle for 42% volatility.
Look at you making pre-earnings trades. Who are you, and what have you done with the Rock Lobster?
Well, I do when one of the trades I like pre-earnings is when you can buy, let's say, a 2-month option for what I would call a near the low end of the vol scale for the name. So it's not in the bottom 5%. If you get it that low, that's even better. But you could buy 42 vol. So I know you have about a 5 or 6 point vol risk to the dead low, which is probably about 35 or so. But actually right now even it's trading 38. So the vol in December from where I purchased only down 4 points, but the stock's down 8. So you could do the math on that one. It worked out pretty good. But this particular one, I like the 30 buy right here. I actually did it today. I did a 32 strike buy right just because I purchased some stock against a position and closed the stuff I was long and then just started writing calls against the whole thing. I don't know. I think hit Twitter in the high 20s or low 30s is probably a pretty good buy, but I could be wrong. But I got a good head start, at least on this group, so I'll start rebuy writing the thing for a while. As far as selling March 44 calls, yeah, what the heck? That looks like free money, too. I don't see it going back to $44 either. But if it did, it would not break my heart. So I think both reasonable trades. I think that's a decent buy right just to make the 51 cents. So, and vol is pretty low in here. And every time I think Twitter gets a little bit cheap, the takeover rumors start to swirl again and stuff like that. So, again, I think it makes a decent cover trade around the 30, like high 20s, low 30s. And I can't disagree with that paper today. I have to be honest with you.
I like the guy who's selling the calls. He's like, yeah, if it gets back up to 44, I'll sell it. Sure. Okay. Sure, why not? Put me in line for that one there. That one just kind of puts a smile on my face for a variety of reasons. So, yeah, interesting paper here in good old Twitter. Let's move from some post-earnings harvesting to some pre-earnings positioning, perhaps, over here in Juniper Networks. They are popping off after the bell today. Let's see what the year has been like. Oh, what a interesting chart Juniper has had over the past year. They're up, they're down, they're up again. Looks like a little mini biotech here. This one, a year ago, was trading, right now, I should say, first off, right now it's trading about 24 1/3 or so, off about 2/3 of a buck, about 2.5%. This one, a year ago, was trading 28.60 or so about $4 and change north of where it is right now. It hit its high of the year, actually, shortly thereafter that, right around 30, almost $31, 30.80 or so. That was in November of last year, and then it kind of sold off again. In late November, it was trading 27, hit the low again around, of course, Christmas Eve of 25.5. Then it kind of rebounded from that, got back up to 28 or so, and a lot of peaks and troughs here, listeners, down to 25, back up to 28, back down to 24 and change in June, back up to 27 and change in July. So it's kind of a range bound. So if you were harvesting premium on the upside and the downside, that was probably attractive to you. Broke out of that range to the downside, though, in August into September here. Hit its low of the year, 22 and change in early September, right on the 3rd, actually, 22.42, before rebounding again back up to about 24, almost 25, and then kind of flirting around to where it is right now, still around that 24 level. So it's kind of been a topsy-turvy year for good old Juniper. Even though the net range hasn't been that big, it's hit it both sides many times over the course of that year. So if you're doing a little premium harvesting, that could be attractive to you as long as it doesn't blow out of the range like it did recently. Let's look here and see what we got going on. Of course, after the bell today is where all eyes are on Juniper, and looks like we got some premium love here, premium buying, Mr. Rock Lobster. They got the AAPL 24 puts expiring on the 25th, expiring tomorrow. So this is a daily trade, so clearly this is all about them earnings, Mr. Rock Lobster. Someone paying 57 cents for these effectively at-the-money puts that expire tomorrow, 3,700 times lifting the offer on the Philly, opening these bad boys up. Mr. Rock Lobster, opening a one-day option, the day of earnings. I got to imagine that trade in and of itself, regardless of the name, regardless of everything else, is not exactly high on the Rock Lobster savvy scale.
Well, I mean, you could connect the dots on what they're doing. You know, Cisco didn't have great report; they're down a bit, so maybe they're just going for the binary shot. You know, bing bang. Like those puts are either going to be worth a lot or zero. So, I think that's like the short term stuff to me is really hard to do. I would rather do it the day after earnings than the day before. That's why I try to stick to premium buying when I think I have a little edge with a little bit of time. So that's just it's a roll the dice, you know, or you know what the earnings are, surprise, and you know that person just might be right. So a very what we'll just call suspect. How right does the guy think he is, or girl? You know, because it's just not only guys that trade
don't
stock.
be biased. There could be insider scumbags who are ladies too. You know that's
yep,
you know we shouldn't.
I think there's no.
We shouldn't assume scumbaggery has a gender bias, sir.
Exactly, scumbags can be anybody. Fully equal opportunity. You know, and it is a put that's kind of banging around the sort of the bottom of the range. You know, at 22 and a half. So, you know, it's a reasonable shot, but it's a shot. I think you're just taking the quarter out of your pocket, you're flipping the coin, or you have very good insight into the character of this particular name.
Yes. Never let it be said here on the option block that we are not equal opportunity scumbags. We allow scumbaggery for all, regardless of gender. So this one will be interesting. We'll put this, tell you what, Mr. Rock Lobster, even though our cup overfloweth on the to be watched category, let's add this one as well so we can come back to it and see how if their 57 cents went away or if because this is pretty tight. They're not messing around. They're going right to the at the money strike, which you're right, kind of has the whiff of maybe they heard something, maybe they think they know something. And they got some stock, and they're a little bit spooked about some downside here. And they're willing to pay a fair amount to have that protected for one day. So we're going to keep an eye on that one. Meanwhile, let's try to pay some of these off because our list is just enormous right now of names and trades we have to watch. Let's go back right now, Mr. Rock Lobster. Hop in your Wayback Machine, your Bill and Ted phone booth, and go back all the way to September, if you can think back that far. September 5th, to be precise, where we highlighted some call love in TPR. This is Tapestry Inc., which if the name isn't familiar with you, it's a holding company, but some of the companies they own will probably be reminiscent to you. They own Coach, they own Kate Spade, and Stuart Weitzman, so obviously a fashion-oriented holding company here. Ticker symbol TPR, trading today about 24 and a half or so, off about half a buck actually, or 2%. So not a great day for Tapestry. When we profile them back on the 5th, the stock was a little bit lower, $22.92, and we profile what was some pretty sizable call love here. And at the time, pretty out of the money call love. It was the OCT25. His paper was loving these bad boys to the tune of 32.5 cents. 5,503 times was the block that came across our radar, but the whole day was pretty active. A total of nearly 34,000 went up on the day. The lion's share of those lifting the offer are pretty close to it. So somebody, guy, girl, again, equal opportunity scumbaggery or knowledge or just deft trading here, as the case may be. But a lot of it just gobbling up the offer here. Someone or some people wanted these things and wanted them for size. More going up the next day, 15,000 more trading the next day, actually. But the OI, ironically, actually gained a little bit. The OI, after all that 34,000 went back and forth, bumped up by about 21,000, almost 22,000. So there was some closing even that same day, maybe. But the next day, 15,000 more went up. Also, the OI going up by about 6,000, 7,000 contracts. So interesting how not all of that opening, but still a little bit of back and forth. Maybe this first couple of blocks inspired someone. Either way, not all of it opening, but still decent size. By the next day, there were nearly 30,000 contracts open on this strike. So a lot of paper went up over the course of a couple of days. And it seems like overall, Mr. Rock Lobster, this one was pretty well timed because almost immediately after this trade, the stock started trending up and never really looked back. Like I mentioned, we're at 25.5 right now. It's pretty much where it was. In fact, this trade went up on the 5th. Almost, they missed, actually this was right about a day off of pretty much the 52-week or actually near-term low here. 52-week low is 18.5, so not quite that level, but close to it, about 20.5 is where it was the day before this trade went up. So they came pretty close to scooping the low here near-term on the stock, and then it rallied right up to 25 pretty quickly. Amazing how that works, Mr. Rocklops. You buy a ton of one strike, and this is going to get the conspiracy people out there all excited about Max Payne and all these other crazy theories, how options work like a magnet, sucking the underlying to the strike. But in this case, that seems to have been the case because it shot right up to 25 shortly thereafter and kind of bounced around 25 pretty much until expiration. The stock closed 25.56 on expiration, so these calls went out worth 56 cents. So looks like these went out pretty well, and there was a lot of paper that went up in the subsequent days. We saw 6,500 trading on the 24th of September, about 5,000 trading on the 10th. These options had all kinds of different prices. $1.30 on the 10th of September. The 24th, they're trading $1.05. So you had many opportunities over the life of these options to get out of them for a 2x to 3x gain. Even saw a block going up for not quite 5,000, I think like 3,500, something like that, on expiration day for this exact same price, 32.5 cents. Maybe someone had some they forgot about and they scratched them. So you had opportunities to scratch at the very least, even on expiration. And of course, they went out for 56 cents. So it seems like this one worked out pretty well, Mr. Rock Lobster. They were still, let's see, going into expiration, there were still about, looks like 11,000 and change open, though, which is kind of interesting. And then 4,000 went up on expiration Friday there as well. So a big chunk still open and went away after that. So maybe someone also wanted to buy some stock there at these levels because they were in the money now. Either way, a weird one, but it seems like the lion's share of this tapestry, Mr. Rock Lobster, worked out pretty well. Would you concur?
I think they did. You know, sometimes people buy that out of the money stuff, especially, you know, in the market swoonage. And lo and behold, it's a lot easier to buy calls after the market's already gone down a bunch, looking for it to go pop up. And I think, you know, it can work. Buying calls can work. and this worked for somebody. I mean, I think they got plenty of money to go spend in that coach store now, I think.
They can buy all the handbags.
They can buy handbags on top of handbags for their handbags.
Maybe throw some shoes in there. You can go crazy.
Yeah.
You can get a Coach branded Maserati. Whatever you want. You can probably go buy it now. They did probably pretty well, even though there was a surprising amount of OI still open towards the end there, which usually when a trade works out that well, you don't see it. But interesting stuff there. Most of it came off. So interesting stuff here. A weird one, but interesting. That's why we like them. Like them in the odd block. Now let's keep on going and see if we like what you guys have to say with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the mail block. Let's see how many of you guys we could squeeze in here. First off, we got Kareem M. Abuda. He wants to know, why do people say all-time high in quotes around Apple when it's less than halfway up towards its all-time high of 705.04, which it hit on the 28th of September, 2012. Mr. Uncle Mike, as our resident former Apple devotee, I should say, now not so much, but you still got some in the old strategic night and other things. Why don't you explain, Mr. Kareem and the rest of our listeners, the magic of split-adjusted pricing, sir?
Split-adjusted pricing, it's a very exciting thing. So I believe Jim Cramer actually does an analogy to where all a stock split is he takes a pencil, breaks the pencil in half. You still have just as much pencil. It's just two halves of it. So what a stock can do is it can split. So let's say XYZ stock is at $100 a share, and they decide that they want to do a 2-for-1 stock split. All of a sudden, XYZ stock will now be at $50 a share, but everyone who owned 100 shares will now own 200 shares. Reasons for why they do things like this, and it can be a 3-for-2 split. Apple, in that instance, I believe, if memory serves, is a 7-for-1 split, meaning that at the 700 level, they did a 7-for-1 split, and it went down to 100. And so reasons for that vary. There's studies that say that if you split a stock, a lot of times it gets back to its original price. That may or may not be true. I've never really looked into that too much. But another reason why companies like to do it is that there's just something mental about being able to buy 100 shares. So with like the Amazons and the Googles right now being so expensive, if someone wants to put $1,000 into it, they can buy one share or around that area. But if someone wants to buy 100 shares of a $10 stock, they can do that. They can trade options on it while owning the underlying, and there's a lot of things that they can do with it. So that's what a stock split is. And so whenever you see a chart, a lot of times they'll give you a split-adjusted price to where even though at the time Apple was trading in the 700 level, based on if you adjust it to the split with which it has had, it was nowhere near 700 at that time based upon the current split adjusted price.
Well said, sir. Let's keep on rolling here. Getting some love here from Smart Option Seller. Hopefully he's smart. Maybe he's not. Some people think they're smart when they're selling options. It's hard to be smart all the time. But hopefully it's working out for you, the Mr. or Mrs. Smart Option Seller. He says, if you're an options trading junkie like me, you should listen to the Options Insider podcast. Great stuff. #options, #option trade. Well, thank you for that love, all you out there who send the love. We love you. We hear you. That's why we keep doing this show. It's for you guys, really, at the end of the day. So glad you're enjoying it. Mr. Song of Ice and Fire, we've got a deceptively simple, yet actually extremely complicated and very, very broad question. This comes from the interestingly named Stock Today, Cash Tomorrow. I guess he's doing all right then, judging by his handle. And handles never lie. He wants to know, can you please explain how to calculate potential profit with options? So that's why I say this is a deceptively simple question, Colin. On the one hand, it's pretty straightforward. Here's your P&L graph, here's your spread, here's your max loss, and here's your max pain. But, on other areas, it gets more nuanced, shall we say. So I'm sure you've had many calls like this over there on the Active Trader Strategy Desk. What do you tell your clients at Fidelity? What do you tell people like Stock Today, Cash Tomorrow? And they want to know, how the heck do I calculate my potential profit with these freaking options things, Colin?
That's a great question. Like you said, it's really easy if you come across something that has very defined risk and reward. As an example, spreads, right? I know what my max gain is. I know what my max loss is. I understand what that risk reward is. Am I comfortable with both pieces as well as that risk reward ratio? Now, when you start getting into things like unlimited loss and the unlimited gain aspects of it, or even substantial when you factor in puts, I actually bring it back to what is your exit strategies, what are your targets on these, where do you plan on getting out? And that really answers that question of exactly calculating that potential profit, because what we're doing is, in essence, the capital we're putting up is going to be the basis of our calculation. Now, how much we're willing to profit on that is going to be putting that profit number up above. Now, if it's unlimited, it's not really defined. So using a profit target can help put that calculation into view by calculating that divided by how much capital that we're investing into the trade. I would say that some traders would rather get a risk-reward look at it, and what they would do is put in profit targets that they have in there, how much they're looking to gain, versus how much they're willing to lose on the trade. Me personally, I always say plan for the worst, hope for the best. So I always say the capital you invested or the max loss on that strategy is what you should be utilizing. Now that becomes much more difficult when you have unlimited loss, things like, selling calls. But when you start factoring those in, you have to at least have the aspect of how much I'm willing to lose on this trade, or even factor in the amount of capital to be dedicated, right? You have to set a certain amount of capital for that particular strategy and then factor that against the amount of profit, which your profit is defined at that point, right? The max amount you can get out of that. I know some traders, when they know how much they're going to make out of the trade, some of them will do a percentage of that. So you can use that to gauge how much actual profit potential will be in there. I will say this, there is a natural connection between the break-even trade or the probability of the trade and how much you can make on that trade. So just realize that. So in other words, as an example, you can have a higher return or potential higher return on buying an out-of-the-money call, but it's less likely that is actually going to make money because you need a bigger move for that to actually start accumulating some value. While you have something where a lower probability of it going in the money, like selling an out-of-the-money option, as an example, yeah, you have lower amount reward, right, because it's only the premium you take in, which if you go far out of the money, that's not going to be a lot of premium, but you have a higher probability on the trade. I know it's a long-winded answer, but I want to cover the different aspects that can go into that.
Well said, sir. Now we need to cover the different aspects of what the heck's happening for the rest of the week, as it is time to roll on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Touched on it earlier in the show, but there are still a lot of micro names to focus on, including some immediately after the bell. You probably heard of Amazon popping off after the bell, Visa after the bell as well, Intel also after the bell, Capital One, bunch of other names coming off after the bell here, after some big names popping off before the bell today as well. So kicking us off strong and then hopefully ending off the day strong as well. Tomorrow we got Verizon and everyone's favorite Yandex on Friday, as well as Goodyear and a few others. By the way, you can find all those move results reports there for all those names and a bunch more. Ton of names you probably never even heard of. There's so many tickers on these reports. TheOptionSider.com is the place to go. Let's go around the horn again. Let's go back to the Rock Lobster. Mr. Rock Lobster, sir, what is on your radar for the rest of this week into the weekend?
Well, as I look at this, same old thing. I think we wait for the Fed. I don't see we're going to do very much. I think trades hovering around 3,000, time spreads around 3,000, just stuff like that, man. I don't see much going on. Obviously, big numbers that coming, from Amazon and Google. The banks have already done okay. I'm a little interested now to see what the oil industry is going to do. I've been slowly adding a little bit of, kind of like the beaten down oil stocks. If you look at them, they're like, that's the land that time forgot pretty much. So, oil's creeping up a little bit. So both of those, just kind of waiting to see how we navigate out of this and we can get over this trade thing. So I think there's probably opportunity to buy stuff. There'll probably be opportunity to buy stuff cheaper. And I just hope the Fed doesn't keep doing crazy stuff with interest rates and kind of like say we're going to take our foot off the gas pedal and we'll just see what happens after a while. That's hopefully what we hear next week, which I think short term people might not like it, but I think long term it will be better. Because gosh knows I don't want to have to pay this government to let them borrow money. I don't know if that would be very good.
Remember, Mr. Rock Lobster, trade wars are great and easy to win.
Yes.
So a year and a half later, we're still waiting for the denouement to all that fun. Mr. Uncle Mike, sir, what are you waiting for? What are you watching for the rest of this week into the weekend?
3,000, as I seem to say every week on the show, or every day on the show, is just seeing where that mark is and seeing how much the earnings can break the 3,000 magnet, as well as the Fed, the Twitter account, and anything else.
And the Song of Ice and Fire, back to you, sir. What is on your Fidelity radar for the rest of the week?
Earnings, and more earnings. With Amazon coming out this afternoon, I know I've said it before. I'm going to say it again. Really, what's going to be coming out with that Fed decision, kind of the verbiage that they're using, and also Brexit. That's still hitting the headlines. I can't believe that this is still going to be hitting the headlines, but it seems to creep up every 2 weeks. So, still kind of watching what's happening in Brexit. And then I agree. What is going to happen is the SBA finally going to make a decision to break away from 3,000 and which direction that's going to be.
Unfortunately, the direction for us is towards the close because that music means we're rolling into the station here on this magical journey. that is the option block. But before we go, let me go back around the horn. Let's go back the way we just came. Let's start with the Song of Ice and Fire. First off, Mr. Song of Ice and Fire. Does this season, earnings season, what would you say are the calls? Are they 30% more, or are they the same? What does the earnings season mean for you guys in terms of like question and call volume? And then B, if folks want to join that queue, they want to call you up for themselves, where should they go? What should they do?
We do get a lot more questions on it, but the phone volumes actually don't spike up. But what do spike up is our online classes. We get a lot more attendance around our earning focus classes and volatility classes, which you can actually take advantage of if you go on fidelity.com/options. We go over the different analytical tools that will be available to you, as well as the trading platforms, and describing the online classes that we teach. So certainly recommend that you take a look at that and take advantage of them. And if you do want to bounce your ideas off of us and run it by someone, certainly give us a call here at 877-907-4429 and ask to speak with the trading strategy desk. You can even ask for me. I'm eager and waiting to have that discussion with you.
There you go. Call them up. First off, start your journey, fidelity.com/options. I know a lot of you have already kicked the tires. Head on over there if you haven't done so already. And if you sign up, you can call up and ask for the Song of Ice and Fire. And you can't ask for Colin. That's not allowed. You have to ask for the Song of Ice and Fire. At first, they'll be like, huh? Then they'll know exactly who to route you to. Fidelity.com/options, the place to go to begin that journey. Mr. Uncle Mike, if I want to begin my journey with you, sir, where should I go? What should I do?
If you'd like to begin an epic sojourn with me, by all means go to my website, stcharleswealth.com. Learn a little bit more about me, how I'm involved in my local community, and what I can do for you. Would love to have a conversation with anybody.
You know you've been doing the show for a while, Mr. Uncle Mike, when you use sojourn. Epic sojourn. I like it, though. I like that it's creeping in.
I couldn't resist.
I like that it's creeping in. That's a good thing for all involved. We'll just raise everyone's level here on the show. And last but not least, Mr. Rock Lobster. I'm not sure what I can do for him, listeners. He's kind of his own beast at this point. Mr. Rock Lobster, sir, if I am intrigued, maybe I want someone to help me, to hold my hand when I'm executing these trades. Maybe I, too, want to try to squeeze some juice out of an iron condor. Where should I go? What should I do?
Well, if you want, all the umbrage you can handle, come to optionpit.com. I do mentoring, not every day, but, a lot of days. I do a little trading, and on and on. So there you go. Come to optionpit.com. And next week we'll have a webinar on how to use options to manage a stock portfolio with Mark for free. Take care.
There you go. There's no telling, listeners, how we could elevate his verbiage. We shall try. We shall try here. Head on over to optionpit.com to learn for yourself. And on behalf of the Rock Lobster and Uncle Mike and the Song of Ice and Fire and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Keep them coming. Probably have enough to do an all-question episode one. Maybe we'll do that someday just for fun. I know I've threatened that a few times, but it would be fun to try that out. Maybe we'll try it out later, but right now, we got to go for a little bit. But we'll be back. If you say, I need more in my life, don't worry. We got you covered. We'll be back in almost exactly a half an hour to talk all that stuff. The Rock Lobster is just talking about with the FOMC and the countdown and volatility and crude and metals and ags and all that good stuff, equities as well. We'll get to all of that on TWIFO. Otherwise, we'll see you back here tomorrow for Volatility Views, and we do it all again on Monday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.